All right, we should be live. Everybody, if you can just give me a quick confirmation in the chat that you can hear my voice and that you can see my screen. It's the 15th of October. The time is, 15th of October 2024, 5? 25. Yeah. Bit rusty, haven't streamed on the public stream in quite some time. I think the last stream was, back in August or September? August, I think. The time is just after 8 p.m. in the UK, 7 p.m. UTC. Apologies in advance if I have some intermittent internet issues. I probably would have been better off connecting to the internet using my mother's dial-up 56k broadband as opposed to the current bag of shit that I have. So if this fails, then I'll probably migrate to Afghanistan and probably use the Taliban's Wi-Fi for future streams. But anyway, let's kick off. So in today's session, primarily going to be talking about Bitcoin. And as always, anything said in today's stream is not financial advice, it's just my view of the markets. Secondly, this stream is sponsored by nobody, but thanks to Spartan, who will be coming on as a guest to talk about trading in the trenches, something that I'm not familiar with. I prefer to lose my money using leverage. Thankfully, I didn't blow out on Friday. So I think also one last thing, obviously Cyber's going to be covering the Pepo App, which we'll start off with first, spend about 15-20 minutes on. For those of you who want to learn more about trading the trenches in a slightly more systematic, not systematic way, but a slightly better process as opposed to chasing any dog shit coin out there. So it's should be good fun. And then we'll talk about the serious stuff on how you can follow me and lose some money trading Bitcoin. But we'll go over some of the charts, my thoughts about the market, and some of the areas that I'm looking to trade. Okay. Overall, looking at the market cap, you can see it's down today 1.3%. It was hovering at that 4x amount, but it's pretty much dropped off. Same with the trading volume, not being great. Bitcoin trading at 111s, the highs of 125s, from a week or two ago. Not ideal. Ethereum just hovering at that 3,900 level. We'll talk about Ethereum in today's stream as well. But before we do that, let me find my bearings. Get rid of this screen here. Let me bring the other screen that I was supposed to bring up. Just bear with me. And with us is today's guest, Cyber. Are you there, brother?
I'm here. Thanks for having me.
Awesome. Can you guys hear Cyber okay? Cyber Spartan, I should say, but I just call him Cyber.
Yeah, you can just call me Cyber. Waiting for a confirmation if people can hear me.
Yeah, I'll just waiting for the chat to confirm that they can hear your voice. Okay.
I think there's like a 10 seconds delay. Oh yeah, people are saying yes.
Yeah,
okay.
There's a way. Folks, this is first time Cyber's ever appearing on a YouTube stream. He's slightly nervous. He's done some star jumps and press ups just to join the stream ahead of talking, so he's pumped up. I don't think your coins are pumping very well, Cyber, but it's I guess as long as you got the pump in your arms and your legs, you can get rid of those nerves, right?
Yeah, it's feeling good.
Yeah.
So okay, guys,
right.
I'm Cyber. Hope you guys are having a very nice day, like I am. I'm 25 years old. I've been trading in the market since 2020 in November. That's when I first started. And 6 months after that, basically my main source of income became crypto. I was doing various projects and finding coins solely to invest in.
Cyber, cut the crap. Just tell them that you fucking caught Astra at 7 cents. That's what they really want to know.
Yeah.
Tell them about your trade of the quarter or the trade of Q3 so far. You caught Astra at 7 cents. I saw you talking about it in your timeline. I really didn't pay attention, did I? And I kind of suffered.
You missed out, bro.
I missed out on the early stages of an easy 10, 15, 20x move. But no, just before Cyber continues, please give him a follow. I've really got to know Cyber over the last several weeks. Great guy. Probably one of the best fundamentalists that I've come across of recent times. It's the whole low cap shitcoin, meme coin space is oblivious to me. I don't really get involved like I once used to. Like I said, I'm far more happy losing money on leverage trades, so I prefer my pain in that shape or way as opposed to getting rugged. But give him a follow. He's a top guy, comes out with some great stuff, does a bit of leverage trading as well, so he's not shy to put his balls on the line and share some good trades. But yeah, Cyber, sorry, Karen, so tell us a little bit more about your journey. You've been in the space for several years, and your Asta trade was a great pickup, wasn't it? That was a great trade.
It was. Thank you so much for the kind words, man, and for the shout out. So yeah, I've been trading for a long time, and as I said, this is my main income at this point. I'm up every day active in the trenches, if you can say that. Always trying to find new opportunities, always trying to make it in the market. And I'm just basically sharing everything that I find on Twitter or on just groups that I'm in with people that I know. And that's what I did with Aster. As soon as I found it, it was like screaming buy at me because like I knew that CZ was going to do like a hyperliquid competition or something like that, and he did launch Aster, and I was like, bro, this goes to like to the moon. It's a no-brainer. Yeah, so I just decided to buy it and share it with everyone, and it turned out great.
Yeah, brilliant. So I think in today's session, what we're doing is, again, this isn't a sponsored stream or paid or anything like that. I think this is Camel's project, a good friend of mine who I chat to, and you know, I see real value in the tools that they've been building. And Cyber is somebody who uses the tools on a daily basis. I remember when we were talking about some of the features and the functionality, there was a coin that kept coming up, you know, like for about 2-3 days. It was Dude, wasn't it?
Yeah, and, it was. We saw it together.
Yeah, we were looking at it and I thought, what's this bag of shit? And lo and behold, 3-4 days later, it just took off, and it went up by 150% in a matter of days. And that really caught my attention. Like, hang on a minute, this is actually a really good way of like picking out coins that come to your attention that could potentially run, because you see all, you know, the whale activity, the buying volume increase, and it's like, all right, this is actually really interesting that the tools are already built for you to kind of like, okay, keep tracking on some of the coins that are surfacing. So yep. Pepo App is a project. I think it's a very interesting project. And the main things that we're probably going to cover in the next 20 minutes very quickly, it's going to be a, if I can bloody switch the screen somehow, it's going to be a case of talking about the various features of the project, essentially, which, if I can just bring up my screen, it's going to be a case of there's something called Searcher, Whaler, Lapua, Portfolio. And I think these are really beneficial, having played around with them. The one thing I like about Searcher, so, you know, from a security aspect, right? How often do you see people talking about the fact that they've clicked on the wrong link or the wrong URL, and they've had their coins or wallets drained? So one of the good things about Searcher is the fact that when you're looking to browse to a certain DEX or certain wallet or certain URL link, you can be assured that the sanitization, let's just call it that, of these links are legit. So, you know, instead of just clicking on some random shit that's going to just drain your wallets, well, you can come into the app under Searcher and essentially find, you know, the links that you feel safe to click, knowing that these have been vetted and verified and they're good to go. And then obviously you've got Whaler. You can see what big wallets are buying in real time. You can copy trades, counter trades, and that's what I was talking about earlier, where I saw some random coin that I've never heard of called Dude, and it went from, what, 30, 40, 50 million to something silly, like I think it was 150, 200 million market cap.
Yeah, something like that. Yeah.
Yeah, so that was really interesting. And it really made me just start observing, all right, this is really interesting. Maybe I can throw, you know, a couple of dollars at some shit coins and just do it quietly and lose some money again. But and then there's Lapua, which again, Cyber, you can talk about that. I'm not too familiar with the aspects of liquidity provision and farming and all that type of stuff, and then Portfolio. And there's a couple of the features which we'll talk about towards the back end of the stream. So if you just want to go ahead and tell us more about Searcher, I think this is really important because, like I said, if you're afraid of getting drained or clicking on some dodgy links, then this is probably one place where you can come to verify that you are clicking on the correct link to a given project or wallet or DEX, whatever it is. So do you want to quickly give us a deep dive into this?
Yeah, that's basically the main thing that I'm doing with it, because when you are using like everything crypto related, everything can be a scam, bro. Everything can be like a wallet drainer when you collect your wallet. But if you're using this, you can basically find whatever you want, and you can be sure that the link is safe. And also another thing you can use it is for basically if you see like a coin going off and you're trying to trade meme coins on it or something like that, like the recent XPL.
I think the first point to start is how does one find the actual application?
Yeah,
That's going to be a good starting point, and then show. I think obviously you have to connect with your wallet, right?
yeah. You first have
That's a
to connect your
requirement.
wallet.
Yeah.
You also need a referral code for this, otherwise it's not gonna work. So yeah, you connect your wallet, you put on the referral code, and this is what you are greeted with. And then you've got everything here. You've got the ecosystems, the projects, and the jobs and grants. If you are in crypto and you're looking for jobs and grants,
Do you want to just
you've
click
got
on the tabs? If you just want to click on ecosystems, yep. So there's your various ecosystems, various projects.
yep.
Yeah, even if you just go back to projects and you click on Uniswap, is that the link to the Uniswap project, or is that the link to their? Yeah, so you can see you can even go to the app from here. There is that option. So you've
Yep.
got this, you've got the correct link that you know that you definitely are clicking on the right place at the
Yeah,
right time.
and
Which
you're
I think
safe
is
to connect your
important.
wallet and everything.
Yeah, okay. If you just step back out, I think another aspect of this obviously is a jobs board. If you're looking for jobs in crypto Web3, then you know where to come. If you're looking at what grants are available, whether you're a builder or you're looking to build projects, that's also interesting as well. So it's just really a great utility. I feel that if you are looking for certain things within this space. Like I said, I'm not paid to say any of this, but I just think it's really valuable for people out there to find a safe place where they can browse from.
Yep, exactly. And it's
Yeah,
very like beginner friendly, so you have everything in one place.
yeah, absolutely. What's on the job board? Let's have a quick look, just in case I decide I need to quit trading. Yeah,
Yep,
fair
you've got
enough.
various jobs in various projects.
Yeah, sure. Awesome. Sounds good. All right, shall we skip on to Whaler? That's the
Yep.
next one.
Let me just put on full screen. All right. This is the example that I already showed you. So this is
Yeah.
Whaler. This is basically my main thing that I'm using in Pepo, and this is basically a tool that gives you the market sentiment of traders on the Solana ecosystem. Like you can watch every meme coin and every like what every whale is doing on the chain, and to this is very good because you can find opportunities like this, like the same way we did with Dude. Like you already talked about this. Like we were doing a meeting with XO, and we were just watching that Dude was we getting bought a lot, and then it did like a very big green candle. Like you can see
Yeah.
the shift in money by doing
Yeah.
this. And this is some couple of examples that I've
If you can
prepared.
just go full screen or F11, just to zoom in.
Yep. Sorry.
Yeah.
Yeah. So basically, this is the example. You can predict price action of coins. So this is the Telegram summary of Whaler, where it summarizes every hour what has happened. So here, if you see like lots of people are interested in one coin, and this was basically where the summary was sent, and this means that these guys are buying it for a reason. So you have to go into the chart and look what's happening, like try to understand why they're buying it. Here, as you can see, you guys are traders, so maybe you'll understand that this had a like bullish movement, and like the chart was looking good, and you've got the convictions that whale are buying it, and this is the result. Like if you got the
Yeah.
big green candle.
And then you've got sustained whale accumulation as well, more than 3 buys. So the key thing to
Yeah.
note here is that when you're using the Telegram bot, is you're just looking for pattern recognition, like which projects or which coin do you see consistently popping up out of nowhere with buy, and then as a result, you can see what happened. I think so that was on the 4th when the initial signal came in when you and I jumped on a call, and then on the 7th. You can see it's gone from 57 million market cap to up to 140, 150. And that's when it started really appearing on CoinGecko. So, that's what caught my attention initially. I was like, holy shit, okay, this is actually really interesting. And it's probably worth playing around with or just observing to see what else surfaces. So it's not something that you can just jump into straight away. I think with a bit of practice, with a bit of screen time, with a bit of tracking on the Telegram, observe just, which calls or what are the number of calls that work out versus, I wouldn't even call them calls, but in terms of whale buys, and then how long does it take for an actual coin or set of coins to move. So maybe you can track that on a spreadsheet. That's how I would do it. Here's a list of coins that have surfaced on the app or the Telegram.
Yeah.
Here's the number of whale buys on this date. This is what happened on this date. This is what happened. And on the nth day, it either tanked or it went far significantly higher. So
I basically call it like a sentiment monitor because you can see what the trader sentiment is. Yeah. And I've got another example here that it can even predict whenever a correction is coming, like long term, because as you can see here in the screenshot, lots of people were buying USDT, like it was screaming that everyone is buying USDT. And this is what's shown over here. And if you had also done the same as these guys, you would have been in profit, or if you shorted Ethereum here in this case, or just followed the sentiment, you would have been good.
Yeah, so that's an interesting one. So basically, when you see USDT being purchased consistently, it's not speaking in absolutes, but there's a fairly decent chance that there's a good chance of a local top being in across a given project or various projects. So if you see whales are now swapping back into USDT, that's potentially a sign that, well, big money is going back into stable coins again, and maybe the de-risking. And as a result of that, it's like you're tracking flows to observe, okay, maybe I need to take profit, or maybe I just want to scale some off, or maybe I need to just watch out for some downside risk in the market. And you can see that happened right at the top on this given project, which was, what project was that? That was Ethereum, wasn't it?
This is Ethereum, yeah.
The top of Ethereum, and those cells came in essentially. So that's also interesting.
Yeah, to wrap it up, I was just going to say this is what the main app is looking like, and the examples I gave are with the summaries, and this is what the summary is like. So this is the whaler summary, and this is all actually a new coin pinger. So whenever a new coin appears in the platform over here, it gets pinged over here. So if you're into new launches and stuff like that, this is kind of gambling, but this is your place if you want to test it out. So yeah, this is the link to join the channel.
Or you can join I was gonna say you can join via the Discord as well, I guess. Yeah, so if anybody's interested in joining a free trading group, if that's what you want to call it, I've left the description, the link in the description to join the trading group. There are some fairly cool guys in there, who have been around for quite some time trading. So it's probably, sometimes it helps being part of a group or part of a community where you're all kind of collabing and scanning and searching for plays or setups. But you can certainly find the links in the Discord group as well.
Yep, it's very good. There's lots of good traders in there.
Yep.
Okay, so
what was that dashboard that you showed us? Can you just go over that? The real-time dashboard.
This one.
So this is Whaler, isn't it? Yeah.
Yeah, this is initially the normal form of Whaler, if you can call that. It basically shows you the buys and sells in real time, and if you hover over it, you can pause the updates.
Yeah.
And you've got the swapper here, which is zero slippage. So if you want to copy trade and counter trade them, you can just do it over here.
I think that's one of the key features that you said, wasn't it, about the project, that in terms of swapping, you're almost getting zero slippage. Is that correct?
Yeah, they have an option for zero slippage tolerance. As you can see, if I type 0 here, the slippage tolerance becomes 0.
Yeah.
This is very good. They're going to make a tool about this in the future as well.
Yeah.
Featuring only this.
And then there's the TWAP option as well, I guess, and the various buying or selling options there. The TWAP, time weighted average price at the bottom.
Yep.
Okay, and then there's a Telegram group as well, isn't there, which pings alerts. So there's the 2 Telegram groups. So again, I think one of the key things about being a good trader or finding good trading opportunities, right, is putting this project aside. If you want to succeed at trading, one of the biggest mistakes that traders make is that they're trying to scan the market for what's a good trading opportunity. They're in the trenches looking at everywhere. They listen to their friends giving them calls. But in all honesty, the smartest traders allow trades to find them. Okay, so basically, what does that mean? Well, if you've got a good process in place, if you've got a good scanner or an alert system, you're looking for trades to pop up on your radar, which catches your attention. And once it's caught your attention, then you want to view, all right, okay, you know what, this could be a good trade. So I think that's where, if you are fairly new to the trading space and you feel as though like you're chasing anything and everything, well, you really need to work on your process. And part of your process is, however that looks like in terms of scanning for coins, you need to have something that's going to alert you or bubble up amongst thousands of coins to tell you, hey, look, this has got some very large volume coming in. You might want to pay attention to this. And if you're fairly new to this, like I said, when you're beginning, whether it's trading perps or shitcoins or whatever it is, you just want to do some forward testing for a good few weeks to figure out, okay, what actually works? How many false signals did you get? How many positive signals did you get? So, I think this is one of those tools where if I haven't got time to build my own screener, then I would be relying upon something like this if I am trading the trenches. So, I think this is where it helps.
Exactly, yeah. That's why I call it a market sentiment watcher.
Yeah, great.
You can see which coins are whales are interested in, basically.
Yeah. Good stuff. All right, should we move on to the next one?
Yep, let me just do full screen. Yeah, so this is Lepore. This is basically providing LP, but it's automated. Like, if you guys have been doing this, or if you don't know what liquidity providing is, it's basically in order a swap to happen between this coin and that coin, you need to have a liquidity pool for it, and you can do this. And the platform you are doing it on basically rewards you. But the tighter the range you do, the more rewards you can get. So basically, if your position goes out of this range, it gets closed. You're no longer generating fees. But by using this tool, it automatically rebalances your liquidity pool. So if you can have a tight range basically forever. Just leave it there and it's working. It's not quite ready yet. It's coming very soon, but this is what it's going to be.
Yeah. Yeah. So basically, from an LP perspective, not that I do this, but basically, it dynamically adjusts the range that you're trading in, and you can define what range to trade. And when price breaks out of the range or breaks below it, it automatically recalibrates the trading range for you. So you don't have to manually do it; it automatically automates it for you. And if you want to continuously do LPing, that's where it is. But I'm not a LP type of guy.
Yep.
I'm a simple person in that respect. But
yeah, this is what it's going to look like, basically. Yeah. It's still a work in progress, so yeah. I think they're doing some updates on it as we speak.
Sure. Should we move on to the portfolio and then we've got the
so this is the fourth tool. It's basically called Portfolio. It's great for tracking all of the assets everywhere in crypto, including in centralized exchanges. So if you're like me, you've always had the headache of always calculating how much funds you have here, how much funds you have there, and this basically solves your problem because you can go to it and you can add all of your wallets, everything, and you can see your performance, the total stats of your portfolio and everything.
Yeah, great stuff.
This is the accounts. You can click add account and everything. Yeah, it's pretty self-explanatory.
Yeah. That's
we don't.
I think it's just a nice way of tracking your coins and your portfolio. And then two more features which I'm probably excited about, which haven't been released yet. There's Swapo and there's Screener. I'm obviously very big on screeners, so that's the one that I'm really looking forward to. But if you can just quickly talk about this very briefly.
So Swapper is basically zero slippage swapping, as I showed in Whaler. That's going to be basically it. And Screener is basically like Dex Screener. If you've been trading meme coins and now, you know what Dex Screener is, and this is going to be a competitor to it. and like except it's not going to have all the scam advertisements like the screener does.
Yeah.
So I think it's gonna be better.
Yeah, no, that sounds good. Yeah. Oh, so hopefully that's pretty much it from an app point of view, and then the project members are right in front of you. So it's good stuff.
Yep. So Pentacle and Azov here are the two main devs. There are other people now, but Kamal is the co-founder along with Crypto Meme Duck. They're great guys. They have lots of experience. Kamal is a very good trader. You XO knows him.
Yeah, great trader. Solid.
Yeah, and you can find them on Twitter. This is their handles.
Yeah, and then the utility is the Pepo coin, isn't it? So from a speculative point of view, not financial advice. Obviously, I own a very small amount. It's for me. It's just one of those things where I own a bunch of coins, a bunch of meme coins, but I'll let you take it away.
Yeah, so lots of people say Pepo is a meme coin, which it does appear so, but it's not really a meme coin. Its main focus is to provide tools like we just saw, and its main goal is to just make life easier for traders overall and provide good tools and utilities for everyone. If you'd like, I can show the chart.
Yeah, go for it. You're a low cap guy. I'm not a low cap guy, so I'll let you. This is your domain. Let you take over.
This is basically what the chart looks like at the moment. This every yoink you see is where I've been buying it.
Yeah.
That's how that's a DJing way to keep a track of everything.
Yeah. Fair enough. I bought mine a while ago, and that was it. I've just left it in some cold storage somewhere. On a ledger. Probably my ledger gets hacked by the ledger team, but there you go. What can I
do? Yeah, why
data link. There goes my fucking coins. Thanks, ledger. But yeah, great stuff. No, thank you for that. So yeah, great stuff. Thank you, Cyber Spartan. Like I said, folks, if you want to join the Discord group, it's free to join. The tools are all free. The app is pretty decent. You're going to find some very good opportunities. If you're looking for those 2, 3, 4x plays in the trenches, which I haven't got a fucking clue what I'm doing, but if I was to start, then it would probably be starting along somewhere along the lines of using the Whaler and the Telegram groups, the alerts that pop off, and just keep tracking those really. And if you can collab with a few friends, or maybe collab in the Discord group, then hopefully you'll catch on to a few good plays.
Lots of good traders in the Discord. They're mostly trading perpetuals and futures. So yeah, I think your audience is mostly into this, so it's a good idea to check it out.
Yeah. All right. Thank you very much, Cyber. Really appreciate you. That's been a solid 20-25 minutes into the functionality for people to use. It's free to use, and I think it's a very good tool set to use for people who maybe don't have anything. But thank you very much.
Cheers, thank you very much for having me. Honored to represent this, and thank you all for your patience, and have a nice day.
Cheers, man. Have a good one. Take care. Thank you. All right, so thanks to Cyber and the rest of the team. Like I said, nothing was paid sponsored. It's just off my own accord. I thought it's a very good app. It's a very good utility, and I think it's there for just a change of scenery. Really, instead of me always talking about perps, if you wish to be in the trenches more efficiently or effectively, then that's certainly one of the tools out there that you can use. Okay, just let me quickly. All right. So Bitcoin, let's get into business. The very first thing that I want to do with Bitcoin, I think we are at this very interesting point. I'm just starting with the top-down approach. Is when you look at the Bitcoin chart, one of the key things that I've been doing with the EXO charity mentorship members, that I was running a mentorship for what was supposed to be 4 weeks. And it's gone into six months now, but that's kind of typical of me. I just let things keep running, for the sake of it. But so far, one of the key things that I talked about with the charity mentorship group that I've been running, and thank you for everybody who took part in that, is when you look at the Bitcoin monthly chart here, one of the key things that I've always talked about on every stream, or most streams, when we look at the monthly chart, is take note of the key inflection points, okay? When you see monthly candle closes with some level of elongated wicks, it's often an inflection point on the chart, okay? That's one example there. If you go to the September to October, November highs, the same thing happened there. And even to the downside, you get a collection of wicks, whether it's 1, 2, or 3 consecutive wicks, where you see these inflection points. The same thing happened here. If you look at the summer range of 2024, 1, 2, 3, 3 times the market tried to sell off in what I define as a range-bound environment, and the market pushes up higher. But then again, December, January, what do you see? You see 2 weeks at the highs and price holds off. Then look at the lows. So what's really standing out to me in this instance is the fact that, well, what is the level that this is coming in at? What is the highest monthly candle close that we've had? Or the monthly candle close. And it is at that 115.7, let's just call it 16K level, okay, for the sake of simplicity. And for me now, when people talk about higher prices, you have to be open to the possibility that, yes, there could be higher prices, right, moving forward. But what do you ultimately need to see? You have to see the fact that price reclaims back above 116. I think that for me is a line in the sand as I look at the markets. And even when you drop down onto the market profile and you kind of map out the market, which if I do very quickly over here, I'll bring up the market profile chart. And what I've essentially done is each one of these profiles is 1 week, okay? And what I've done here is merged 5 weeks of market profile into what is a 5-week composite value area, okay? So we'll just label that as the composite value area for 5 weeks. Okay, just give me a second. Lost my text there. Do that again. Five-week comp. Okay, let's just do that in capitals. And basically what that is, it's a merge of overlapping value for 5 weeks. And you can see where the composite value area high is. It's at where? It's at this key level of 120, okay? And then the composite value area low, which is at 116.2. And what's key for me is that if you look at where Bitcoin was in terms of trading the highs, one of the key things that I even talked about on the timeline is that this 120 level is going to be key. Because if price tests this level here, okay, and it bounces off, but if we come back for a second time, there's a very high probability that we're going to rotate to the other side of the composite value area low. Now, this is the weekly profile. If I switch this to a daily profile, you'll essentially see that playing out. And when I zoom into the profiles, okay, you can see what's essentially happened there. Let me just get rid of these arrows. But essentially, when we sold off after swing failing 125s, we took out the high, we traded almost into the 120 level, okay? Just stopped short of it, pushed away, traded into that level. If this was bullish, at this point, this low should have held. We have no reason to come back inside of this 5-week composite value area high. Now, I was obviously positioned from the 125s, anticipating the fact that we were going to get a move back into 120s and held the short in anticipation that we're going to see a move down to 116s. Now, what gave me the belief that, that the high of 125, 126 was likely to be in? Well, essentially, it was a result of a combination of shorts being stopped out, becoming false buyers, into a bunch of stacked asks, and nobody else was willing to lift the offer. And that's why it was essentially a swing fail back below the level. 1, 2, 3 days tested the lows. This was the key aspect for me. The fact that we traded into this level, right, opened up the following day, pushed up, took out the previous value area high into this thin area. The minute we started gravitating back down, you can see what happened. We sat above the 120.5 level, and the minute we broke through, look how thin the profile is before it trades to the other side of the range. Okay, then we got the consolidation Friday evening, okay? then we broke below the range. Once that happens, that was a cause for concern. Price consolidated, and then we got the big deleveraging event, flush off all the way down to the lows. Now, what's key, if you recall what I've just pointed out to you, is that when you look at this monthly chart, what's the key SR level that we have here? It's 116s, isn't it? Right, 116.2, 116.1, depending on which chart you look at. So first of all, the significance of this level is very, very important. The second point that I want to make is that, again, when you look at the market profile, and this is a daily profile, well, look at what the market did. It sold off, okay, consolidated, and then expanded where? Straight back in to the single prints over here, just below the composite value area low. So generally what happens as a rule of thumb is that when you have a composite value area, okay, generally if price is rotating between value area low, value area high, value area low, that's just your rotations that you're looking to play. But when you have something in the shape or form where price has been within the value area and you get a break out of balance, okay, all this is bracketed, range-bound price action. When price breaks out aggressively, normally what I've observed is that you get a bunch of single prints because you've got liquidations and stops being run or stops getting taken, which further accelerates the move down. So that's why you have like a level of thin inefficiency, or what ICT fanboys called a fair value gap. Now, what I was looking for was for the, okay, fine, price is selling off. What's key is that when price eventually comes back to test the level, do we reject from here? Are sellers stepping into the market? And the second point that you want to note is that, well, what was the origin of the cascade move down, the liquidation move? And again, when you look at the time frame, when you go to the 4-hour chart on the 4-hour candle, this was the 4-hour candle which led to the liquidation. And what has price done is come all the way back to the origin of that move down. Even when you look at it on the 1-hour time frame, where even on the 1 hour, you've got price selling off, trades back up, and then gets pushed lower down, okay, leading to that liquidation event. So what has price done? You can see that level of inefficiency on a naked PA chart, a price action chart. You can see that this was the last low pre-break, okay, and this was the local high. So all this is, again, that fair value gap, or what I prefer to call inefficiencies or single prints. And if you look at where it is, it's this monthly SR level is confluent with the 5-week composite value area low. So for those who are wondering, why did I short 115s? Well, that's your answer right there, because we couldn't reclaim back inside the 116. And had we reclaimed back inside 116s, whereby this is how I would normally trade it, whereby when price does eventually, if it had reclaimed back inside, then if you get a retest of the lows, consolidation, then you have to look for the trade back towards the 120s. That would have been the long scenario for me, okay? The fact is that we tested the level once, twice, rejected, stop at the high, took the short, back down into the significant lows of 110s, 109s, and that's why I took profit on the screenshot that I shared. And this was the trade setup that I shared with members on Sunday's stream, that I don't believe that we're going to veer reverse up. I think we're just going to be in a bracketed range-bound environment, because generally when you see these liquidation events occur, it takes the spreads thin out, the book is very thin on the bid and the offer, and it takes a fair few days, sometimes weeks, for price to recalibrate within a range-bound environment where the book depth thickens out again. So again, when you look at everything across the line, across the board with that 116 level, what did price do? Well, essentially, I'm just going to quickly delete everything and redraw everything. This is our value area low, okay, at that 116.2 level. So you can see if I zoom in on the daily profile, and the reason why I'm doing this, just from an educational point of view, that you understood the context of the trade, the context of the market, so you can select better trade locations for areas that you are interested in. And like I said, the price action chart is all well and good. Candlestick charts are fine. For me, that's more of a high time frame compass, like zones that I'm interested in. Whereas the context that a market profile chart gives you is far more granular. You can really, really zone in and identify the levels that are of interest as to where you want to see a reaction. Again, none of this is to be predictive. You're not supposed to use a market profile tool and say, oh, look, there's a single print, it's going to reject every time. You're looking for points of inflection. You're looking for points of reaction. You're not trying to predict what's going to happen. And you react upon those points of inflection. So notice how we traded up into those single prints, right on the edge, okay? And what did we then do the next day? Look at the IB range. First hour of the trading session, we took out the previous day's high, got acceptance back inside. That was, for me, a signal to start thinking about, all right, we could see value shift lower down. We're seeing a level of exhaustion. If you looked at the heat maps, asks were stacked across this level here, okay? So somebody had to lift the offers to really get price back into that 5-week composite value area. But when I saw weakness, okay, and my short was from 15.1, the next day we open inside value, stop at the high. Where did we oscillate to? Look at this thin inefficiency price, trades through that level fairly quickly into the lows, okay? And then it closes back out, ends the day around here, being capped by this value area high, okay? Now, as you can see over here, because we've had the breakdown from yesterday, it's left behind a couple of single prints, 1, 2, 3 areas. So again, this for me now, this 113 to 115 level, 113.9 to 114 or 115 is going to be a challenging area to trade through the first time. And then also looking across the profile, you can see that we've still got this poor low from the 109.5s. So what I'm looking for is, all right, is price going to find a way to trade now down into these lows to take out these poor lows or to trade these poor lows? But no, this isn't the only one. Because again, if you go far back to this price action here, this was the move from 108 to 126s, okay? That was that aggressive move up that we saw. Well, look what we have here. We have another poor low down here on the 27th, and we have, I think we traded this, so that's been repaired. So again, this area around 108 is going to be key now. You've got an inside day, okay? Price sells off, price consolidates, inside day. That's your shift in value. Look at the IB range there, IB range high. Once it gets back above there, look at the trend extension to the upside. So this area of 109s to 108s is going to be key for me. That if we trade into there and we find acceptance back above the level, then I probably will be entertaining longs. But if we find price trading below that level with acceptance, then there's no way that I'm going to be entertaining the long. And one of the key aspects about trading is looking at areas that you wish to trade. But just because you have a thought process that, all right, I'm looking for a reaction to trade this area on the long side, doesn't necessarily mean that you have to take it. You need to see reasons for stepping into the trade, okay? So again, 109s and 108s is the immediate area. I've kind of gone over the context, what price did, where it sold off from, how it traveled through the composite value areas. And again, so really what you should be able to infer now is that this 116 level is key for me. If we are going to see higher prices and into new all-time highs, then this for me is a line in the sand, okay? But just because this is a line in the sand for me doesn't mean that I'm not going to be still looking for long opportunities. Of course I am. But for me to be of the opinion that there's going to be a very good chance that we're going to take out the all-time highs, well, this is the level that it's going to get back above. So you've got these lows here at 109s, okay? You've also got this structure here with a poor low at 108s. So when you look across the line, this is the region that if we see price pushing down into here, okay, and you see aggressive selling. Now, what does aggressive selling mean? Anybody want to answer that question? What does aggressive selling mean? Does that necessarily mean that shorts are piling in at the lows? No, it doesn't, okay? Aggressive selling can come in two forms. You either have people who are long, okay, from lower down here. Let me just get my color scheme back up somehow. Just give me 1 second. All right, I'm back again. So basically, the point I want to make is that looking at that reaction, if you see aggressive selling, it doesn't necessarily mean shorts are opening. Obviously, you can look at the CVD and you can look at the open interest to gauge what's actually happening under the surface. But really, what I'm looking for is, okay, when it comes to aggressive selling, it could essentially be something as simple as like, all right, so if longs have built up here and over here, where are they going to place their stops? If you're long this market from the last day or so, are you going to place your stop down here, or are you going to place your stop here? That's the question, and quite likely there's going to be traders that have their stops just under these lows. So what happens is when price pushes down into there, that's where you see a pickup in tape speed, a pickup in volume being traded. And what really matters then, okay, if you've understood anything that's happened on Friday, if you've understood anything that's happened on Friday, if you've understood anything that happened on Friday, well, if there's no bids in the book, right, what do you think is going to happen to price? If you have a ton of aggressive selling that isn't being absorbed, or there's no demand there, then all that aggressive effort should really push price further lower down, okay? But if there is genuine demand, they should be able to absorb all that aggressive selling, combined with any late short sellers jumping in here, and generally if there are late short sellers, well, they're going to get trapped. The minute price reclaims back above that level, I think that then gives you a good chance that we could see price trading back up into that 114 level, 115 level where those single prints are. Acceptance back above there, then you're back into value. Then you can think about 116s to 120s. But that for me is the long scenario. Currently, there isn't a short scenario for me because given the context of where price is, the time to short for me was from the highs at 125s, and I took an intraday short down from 115s to 110s. Now I'm flat. I don't have any positions open, but hopefully that's the long scenario, if there is a long scenario that I want to see set up. All right, any questions so far? Is that clear? So really, when you look at price across the line, if you want to trade this as a local range, then for me, taking the range highs, and then you've got this consolidation of the range lows, this is the key level for me again. So you can see how much context I've really put into this being the zone, because essentially what I'm saying is that if we are going to push down, if there's no demand here, and sellers are in control, passively selling, okay, any buying is absorbed by sellers and then push lower down. Once these guys are offside, what you need to see is absorption, okay? Large selling volume being absorbed. We've got this anomaly of a wick, but taking this key SR level out is going to be key. And partially filling in most of this wick, we'd have to take out the low, but if we see buyers stepping into the market now, pushing price back inside the range, I think that gives enough of an invalidation to warrant a trade setup that you've broken structure here, higher low, higher high, local microstructure. And where are you looking to trade this? You're looking to take this back into the 116s, okay? 116.2 was essentially classical range trading. Range low, back into the mid-range, take profit. If we see acceptance back inside value, then you can go for it again to the highs, okay? Keeping it very, very simple. Now let's just zoom out onto the higher time frame. I should have really focused upon the higher time frame first, but here's what's key for me. When I zoom out and look at the chart here, just give me 1 second. So let's just talk macro now, the higher time frame, levels. When you look at Bitcoin from, obviously we've talked about the monthly aspects, okay? You can see the rejection that we're getting from these highs. Now, for those of you, again, who have been watching my streams, this was the range projection that I had from 2024. When we were down here, you can see what I've done. I've essentially duplicated this range and projected it higher, okay? So for me, 125s 120, 125, 130 isn't a top, but it's an area where I suspected there's going to be a level of resistance coming into the market. And again, when you fast forward what happened, obviously you know where we're trading now, right? Given that how the market has played out over time. But what I don't like about this is the way in which price is rejected from these highs over here, okay? That's what gives me a level of belief that we could see a slightly deeper correction into where, I'm not too sure. But when I'm looking at this from a weekly perspective, well, the first immediate level that stands out to me is that if we can't find a bid at that 108 level, then that opens the gateway to where? To 98, 99, that 100 level. And it brings this range into play, okay? Given that we have to see a reaction from this level. So the whole point of this is that, look, you have to be aware of the downside, okay? You have to pay attention to the downside risk. And I'm never going to be one of these guys who shouts, you know, we're in a fucking bull trend. Fuck theirs. Long with size, right? I think you're asking for trouble. You have to respect the market. We've just seen what the market has done on Friday, how it's taken out a lot of traders out of their positions, okay? It's unfortunate, but this is the game that we play, all right? And you have to accept that the market dictates. The market doesn't give a flying fuck who you are or what positions you're running or what your beliefs are or what XO thinks or what SC thinks, okay? The market will do what it wants to do. Your job, first and foremost, is to manage risk, to survive being offside, to survive being liquidated, all right? And so that's why I have to caution the fact that, look, if we can't get above 116 and we start pushing below 108 and there's no reaction, then I really do think there's a decent chance that we trade into this 198 level. And that's why I said, although I might be looking for a long, I have to see how price trades at this level. Okay, if we can take out the level and it's aggressive selling being absorbed and we see price pushing back up, great. I can take the long, knowing where my invalidation is, looking for price to push back up into 116s, and then we'll take it from there. Otherwise, if I've taken the long, we push up, I don't want to see price come back below, because the minute it starts doing this, there's a chance that all this is just trend continuation lower down in terms of this being the higher time frame range from 100 to 125s with the mid-level at this 112 to 113 level. Okay, you can see it's a very clean inflection point, resistance, resistance, resistance turns support, support, support. Okay, and now we're just chopping around in almost no man's land on the higher time frame. So again, you know, do we come lower down before we make another stab? Whether it's something like this, I don't know. Okay, I have no certainty that price is going to come back into 98. And is it going to be another lower high or is it going to be a higher high? We'll have to wait and see, okay? But this structure has played out many times on Bitcoin. You can see as far back as every time we've had a series of lower low, lower high, lower low, lower high. If a real flush out of positioning, higher low, higher high, there's your shift. And that's trend continuation hierarchy. So the question is, do we remain range bound for longer? And if so, then what is that higher time range that we should be looking to play? And for me, anybody who's talking about, you know, we could go to 85K, we could go to 75K, that's all well and good saying that. But is it actionable? No, it's not, okay? How are you going to formulate a trade to think about taking it now from here to down there? You can't, because you've got this area to contend with. Then you've got this level to contend with. So just taking it from one level to the next and keeping it very, very, very simple, because you're looking to trade the high time frame inflection points. And for me, this was a high time frame inflection point. This is a high time frame inflection point, okay? From a swing perspective, if I want to do business, I would love to do business down here at this 98, 102 level, and then drop onto the daily, the 4 hour, the 1 hour to really refine my levels, bring in the market profile to figure out, all right, what's the trade location going to be? How can I get into this trade? What do I need to see from an order flow perspective? Am I seeing signs of absorption? Am I seeing signs of seller exhaustion? Okay, just like we saw signs of buyer exhaustion up at the highs. Why? Because the market couldn't lift the offers. Okay, and a lot of this drive up, a lot of these moves up were just shorts getting squeezed. The same happened here last week. Okay, every time, if you looked at the open interest in CVD, every time price pushed up, it wasn't necessarily longs opening. It was just passive bids supporting price driving higher and shorts unwinding until there was a liquidation and the price rolled over again. Shorts piled in, open interest increased, same shit happened again. Open interest was dropping, CVD was rising, that's shorts getting squeezed out of their position, certainly late shorts getting squeezed out of their position, and then what happened? Shorts pile in again, open interest rises. Final push up, some shorts got liquidated there, and then price dropped off, okay? So when we talk about this for me is all a sign of redistribution in terms of the local context. I'm not talking about redistribution from a higher time frame point of view, but from a local time frame point of view, okay? And it's those subtleties that you have to observe and watch in the flow, that if this market was really going to go higher, right? And if shorts are really going to get trapped, well, what do we normally see in an uptrend? Well, we often see that when shorts are piling in and trying to push the market lower down. So say, for example, if I'm shorting this, and shorting this, and all this aggressive selling and high selling volume is coming in, so there's a large amount of effort taking place, but the market, why is the market not going lower down? That's telling you that passive players are absorbing any aggressive selling. So all this selling is really selling into a brick wall that they can't break down. So what do you think is going to happen to all this positioning over here? Well, the minute they're offside, they're going to peak their position and become aggressive. They're going to be forced buyers, aren't they? And by becoming a forced buyer, is it any surprise that you have a candle, a breakout candle like this, and then trend continuation higher? Okay? Whereas in this instance, you've got buyers absorbing, and then that's it, the market's chasing higher. In this instance, if the market wanted to go higher, where were the buyers? Okay, they vanished, they disappeared. Nobody is willing to lift the offers. Secondly, asks were absorbing, getting filled and pushing the market down. Okay, so what happens is large players get their positions filled. Okay, price trades up, fill. What do you think these guys are going to do when they're waiting for their asks to get filled and they don't get filled and price is rolling over? What would you do? Okay, you can start chasing price. So more market. The more price is moving away from the level, participants are going to start jumping in because they didn't get filled. And that's what causes that level of aggression in the market, pushing price lower down. And there's not enough demand to counteract that supply coming into the market. Makes sense? And it's the same on the way down, like the same on the way up. Think about it, right? If you're, because so many of you are used to trading spot and buying a spot position, if you've got a level of support here and your bids are here, and down here, price does this. And you know it's already come off like 30, 40%, and there's a good chance it's going to bounce 10, 20, 30%. You don't get filled. What are you going to do? What's your natural emotional instinct? It's like, oh, fuck, I've missed the low. I'm not going to get, I'm going to miss the trade. So what do you start doing? You start piling in here, don't you? And some people get too tight where they get stopped out of their position and price goes higher again. And then they jump back in again, okay? So that's just the dynamics of the markets. And so all these bids that you had resting here, well, you've cancelled them to piling out the market at a higher price because you still believe that this is discount. This is at value because you perceive that value is going to be higher and you don't want to miss the move. So it's just exactly the way it's exactly the same on the way down where price is coming up into resistance. You've got all these asks at this 120 level, 122. Price does just fills this and moves away. So what do you think these guys are going to do? If anybody wants to aggressively sell the market, they're going to step in, aren't they? Because price is now pushing away, adding further fuel to the downside. And then what happens is that, just say you come to a level of support, you've got passive buyers who are interested and you've got aggressive shorts now piling in at these lows, but they couldn't push price lower down. Well, guess what? There's a chance that they're going to get squeezed out of position. And that's why you get these limp rallies where open interest is going down and CVD is going up. Generally, I don't think CVD is the best measure of these, but sometimes it can be used. But generally, CVD going up and open interest going down, that's your shorts closing out that position, not necessarily buyers piling in, okay? Because if buyers were piling in, you'd also want to see open interest going up with CVD and price going up. That's far more bullish. But when it's shorts getting squeezed out and then you get a pop and you see a spike in liquidations, well, those liquidations are being absorbed by some passive assets. They've got their positions filled. Now they're willing to take it lower down. And I'm going to leave you with one thing here, which I covered on Sunday's stream with the members, is understanding that in future markets, when you have a bigger phase of redistribution, how can you identify that? Okay? And I wonder how many people who were actually short last week, I wonder how many people who probably shorted this, or even here, saw this move up and just puked their position, thought, fuck it, you know, price is going to go higher, I'm going to get out of my position. Because they're not understanding what's actually happening under the hood here. Okay, the flows will tell you what's actually happening. Some people would have taken profit. You know, price comes here, it's pushing away. You know, oh shit, I should have taken profit down here. In fact, I'll just close out my short that I've had from 124s. I'm going to take profit at 122s now because I think it's going to go higher. But when you understand the dynamics and why I had the conviction to hold the short from 125s down into 116s is because I understood what's actually happening under the hood in terms of price action. And that really brings me on to a key important text that I've shared in the past, which is this here, redistribution. What does that mean? And I think the key thing, just skipping all of this, you can read this if you want to in your spare time, but a short covering rally is the beginning of the redistribution trading range, okay? Short covering rally, another short covering rally, okay? It's the beginning of the redistribution phase. Beginning of the redistribution trading range. A sharply rising stock price will drive nervous short sellers out of their position. What do you think was happening here? Okay. What happens during redistribution is that a series of rallies and declines will occur, with a general tendency for the rallies to be sharp and volatile, and then the reactions to be less so. These rallies and reactions jam the shorts and repeat until the less resolute among them have relinquished their positions. That's basically squeezing shorts out, squeezing late shorts out, or squeezing anybody who's in a short position and they've kind of bottled it, okay? Only then can the downtrend resume. So the key thing here is these rallies and reactions jam the shorts, okay? Every time, squeezing up. And if you want to study this price action, then just go look at, you know, your platform of choice, whether it's Trading Light, whether it's Market Monkey Terminal, whether it's, you know, whatever terminal it is out there, Velo data, go have a look at how the open interest in CVD was behaving on perps during this price action. Take a screenshot. Make it into a journal so that in future instances, when you see, you got to remember price is fractal, when you see price exhibit this type of behavior, okay, and sellers are stepping into the market every time, and eventually you get the breakdown. Okay, this was even before the liquidation move. My target was 116.2. That's how you can identify what's actually happening under the hood and how you can hold your position or conviction longer. And, you know, there's going to be nuances where you see this in a downtrend, not necessarily an uptrend. The behavior of price is completely different on the way up versus on the way down. All right. So I think back to where I was earlier, really when I'm looking at price here now, is I just want to wrap up on a few more things, is that I am looking for a long opportunity. What gives me reservation is if we just look at the XO trend scanner that I've put together, which is the 1221 EMAs. I sometimes use the 1225. And one of the key things about markets that you really need to think about, okay, is look at the trajectory. I've said it so many times on stream. Look at the trajectory of the 1221, okay? When you are So really, the best way to think about this, and I'm not sure if anybody's ever covered this, but if you've got a y-axis and an x-axis, okay, that's a 90 degree, 45 being at the mid. When you have an elevation that's around about 10, 15, 20, 25, okay, that's just a very slow gradual trend. Not the best of trends, but a slow gradual trend, whether it's on the way up, whether it's on the way down, okay? When you're at 45, that's fairly decent. When you're at 60, 70%, that's a very aggressive trend. You want to stay on the right side of the trend. You want to stay on the right side of the market. You don't want to get caught offside. You don't want to do the mean reversion play. The mean reversion play comes when you believe that price is likely to trade at the extreme of a range, okay? Look at the velocity and look how price extends away from the bands. It's like an elastic band. When you pull it and you let go, it comes back together again. That's essentially what price is doing. It pushes away, comes back into the mean, okay? That's where your mean reversion trades take place. But what's key here is that when you think about what's happening here, look at the drop-off in the momentum of the bands. Isn't price now trading above, under, back above, and back under? And what does this exhibit? It exhibits a range-bound environment. Now, what happens if we start seeing acceptance below the bands with continuation lower down? The pressure now is on the downside, okay? So another reason why that 116 level is key for me, not only is it a monthly SR level, not only is it a 5-week composite value area low level, but you now also have the 1221 moving average hovering at that 115.8, 115 level. I suspect by tomorrow it's going to be at 115. So we already know that there's a bunch of single prints. If we push up into there and reject, there's a fair chance we could see continuation lower down, okay? So we really need to see acceptance, something like this, over the coming days. Now the problem that I have is that we've just crossed under, okay? So if it's shallow, there's a good chance we can revert back up. If it's continued, look at that rally into the band, sell off, rally into the band, sell off. Almost like a 1, 2, 3 drives move. Do we get something similar? We'll have to wait and see. Okay. So that's kind of the daily time frames, and that's why I'm reluctant. Okay, keyword. I'm not aggressively looking for longs. I'm reluctant to look for longs because I need to see my setup take place to give me the belief that this is a high probable long scenario. And that's going to be, like I said, trading into here, filling in some of this wick, and then show me acceptance back above this level. Then I can think about, all right, we can trade it back into 116s. Above 116s, there's a good chance we're going to go to all-time highs. Okay, that's how I would perceive what's happening here. Now, let me show you something where I fucked up. Okay, I nailed the trade from 125 to 116s, but I fucked up. Now, for those who watched the Sunday stream will understand where I messed up. And this is where you've got to have a level of fluidity in the market. My excuse is, in my mind, 116 was my take profit level. I did not see the cascading deleveraging event and liquidation event happening on a Friday night at 10 p.m. in the UK time, okay? I've got better things to do on a Friday night, not the start the desk, but that's it. But what could I have done better to have held that conviction that this is actually really falling off a cliff? Well, if you look at the 4-hour time frame, all right, one of the first things, and I think I talked about this on the timeline, that look, we have just lost the 4-hour 1221. This is now pressure on the downside, okay? You can see we start trading under the bands. Look at this beautiful uptrend. There was no reason to fade this until we came into where? Into the range high. So notice that when you're looking to fade, you're not trying to mean revert this shit here or this shit here. Why? Because the bands are telling you to stay on side of the market. You don't want to be fading this just yet. Number one, you're fading in no man's land. There's your support. And you've got all this thin level of inefficiency to an extent, a thin volume profile that we could trade into here or take out the high. Well, guess what we did? We had a 1, 2, 3 drives, exhaustion at the highs, price trades under, that's my short, okay? Trades through the bands, pushes up, and closes back inside. First point of weakness there. That's another reason that gave me conviction to hold the trade. Now, what's key here is that my objective or my target was what? 116s. It was the value area low. Okay, that was the objective. That if once price trades from this was the 5-week composite, once we get below the composite value area high, we should go straight to the composite value area low. Well, if I replay the chart, let me just show you something here. So here's an example of the work that I do. This is what I did on a Saturday. I reviewed the trade and I was asking myself, well, look, what could I have done better? I really fucked up there because having had a very, and I was pretty well sized up from 125s that I closed at 116s, giving away a good chunk of the move when it went lower down. So, you know, it was a winning trade, but I could have done better. And that's what you've got to get into when you want to improve as a trader. You've got to look at what did the trade then go on to do? What could I have done better? And to keep it really simple, this is the 4-hour chart. If I go to the 1-hour chart, you can already just see one of the key things that I've preached is that when you see a shift in momentum on the indicator that I've put together, it's fairly box standard, right? Thanks to Charlie as well. Look at the period of green, but look at the period of red that we start seeing, and a very short-lived period of green, more red. This is now telling you that there's a shift in momentum in the market, that the long opportunity down here isn't really there. And the fact that we tested the value area once, traded above it, what are we doing back inside? If this is bullish, this is not where you want to be buying. This is where you want to be thinking, shit, there's a good chance we could gravitate to 116.2s. And if you look at the way in the way in which price gets there, okay, that's me taking profit. Taking profit. I did not want that other candle to print because I'm trying to make a point here. So let me just stop that and show you what I could have done better and how you can use sometimes a very simple system to improve or stay on side with the trade, okay? So when you look at this, and this is on the 1 hour, and this is what I did with my trade from 115s to 109s yesterday. If you now go to the 30-minute, at any point, okay, now remember, you've got to go top down. The 4 hour was already bearish, breaking down. You want to flow with the high time frame context. And when the momentum picks up, what's key for me here is that look at the trajectory to the upside. Is this, when you think about the angle of elevation, look at the trajectory. This is almost at a 70 degree, 80 degree. You don't want to fade this. But then look at the drop off in momentum. That's where you want to be paying attention to turning points in the market. Now, the key thing for me is, you know, when I look at this on the 1 hour time frame, breakdown, sideways, breakdown. Okay, look at the bands here. All right, we've pushed quite significantly away. Let me drop to the 30. The 30, look at the angle of elevation. It's not drifting, it's breaking down. We are in trend mode right now. Okay, from consolidation, breakdown into trend down. All right, let's go to the 15-minute. Has at any point price crossed back above the 12 EMA on the downside? No, it hasn't. If I go to the 5-minute, has price crossed above the 12 EMA or shown compression of the bands? Compression of the bands being this, okay? That's where you're going to get range-bound price action. This is a clear trend, even on the 5-minute. It's trailing the bands. Even on the 3-minute, has the bands at any point, apart from this, traded above it, but has it crossed? No, it hasn't. Trend continuation lower down. Watch this. Go back into the 5s. I've taken profit there. What I really should have done is waited for price to develop a range, okay, and the bands to compress and push up. Then I'm looking to get out. Fine, I'll get out on the higher low or a higher high, okay? I'll accept that. I'm not looking to bottom tick the market. But by being hasty and eager to take profit from this move down and then thinking about, all right, I really want to look for longs now. I'll come back on Monday and look for longs in the market. That's where I tweeted that. All right, short closed, happy with the trade. You know, I'll come back to the market and I'm going to start looking for long opportunities. Well, had I waited and just let the trend play out, what do you think happens next, okay? Price trades into the bands. Did we get a crossover of the bands? Is price consolidating in a range? Straight down again, okay? If this was bullish, we should have had a rounded retest and held, okay? Or a high low or a high high. What happens? Rolls over. 5-minute. Nothing there to tell me to get out of the trade. 15-minute. Nothing there. Look at the trajectory of the bands. There's absolutely nothing there that was telling me to get out of the trade. And the 30-minute is pointless because at that point, the extension of price and you see the spike in relative volume, you now know that you're at a bottom, a local bottom. Large liquidations, look at the relative volume, bigger and higher than anything that we've seen over quite a period of time. When you see this coming on the 5-minute chart, you know you're very close to a bottom at this phase, okay? Then there's a drop-off in relative volume. This was a big cascade. That's the bottom right there. Okay, you can see that on the relative volume bar there. So again, use my experience as a way to build this and bake this into your system to identify, all right, this is how I can really stay into a trend. You know, you can use something very similar, like EMAs aren't the only option. You can use wherever you want. Bollinger Bands, you can even use the Whole Sweep by Insilico, right, which is one of my favorite bands that I like to use. But even this on the lower time frame would have had you back into the trade here because of the price rolling over, even on the 5-minute, I should say, even on the 15-minute. Slightly lagging, okay, in this instance, in the sense where prices shut off, but try to use some sort of momentum-based filter that will keep you in the trade, but also keep you out of bad trades as well. All right, that's the key thing. Not only will it help you stay in the trade, it's going to help you stay out of bad trades, and that's why for me, when I look at the moving average system that I use, I don't use it as a trigger or a way that I identify trades. For me, it's more of a, all right, do I want to get into this trade? Which way is the momentum? Am I seeing reasons to get into price? Because you have to remember the moving averages are a derivative of price. It is a lagging indicator. It is based upon price, okay? Whereas the whole moving average is zero lag. So that's something for you to think about moving forward. But ultimately, you know, long story short, when I look at everything now, I think the key thing for me, what stands out, at what point do I think that we're going to see 100 or 98? Well, for me, it's a case of, if I bring on the XO trend scanner and where I'd be looking to shift context, if you look at what this has done, it's flagged bullish from the lows of February 2023, okay? And at no point when price has lost the bounce, has it ever developed into a trend down like it did here? Okay? It's been very short-lived. Price trades under the bands. The minute it gets back above, guess what? You want to go long. Look at this. Trades under the bands. The key thing is, this is a range-bound environment. Remember how everybody was saying this is bearish because we've got lower lows, lower highs, lower lows, lower highs? Yeah, that's microstructure, or that's structure within a range. Structure within a range doesn't really matter. Structure within a trend is what matters. This is structure within a trend. You got the high, you break structure into a lower low, lower high into a lower low, okay? Until you get a period of sideways price action. And then again, I've pointed this out on previous streams that when this was happening, I specifically made a tweet about this, that I don't understand why people are getting bearish or why they're trying to call the top on Bitcoin, because this could be distribution, but the fact is that we are in a range-bound environment. And one of the key things about ranges is that you will get lower lows and lower highs in a bullish market. It's almost like it's one of these channels or flags that's taking place before you get a breakout. You saw that happen over here. Again, so many people fucked up in 2021. Why? Because, oh, look, we've got a higher high, a higher low, a higher high. This is really bullish for Bitcoin. Well, sorry, it isn't. It's a range. You're going to get these fluctuations of lower lows and lower highs within the context of a range. What would have given me conviction is break up, pull back into the range high, trend mode, okay? That's conviction in terms of trend. This is not a shift in structure. It's a range-bound environment. Now, what's key is that if we run it forward to where we are today, what I'm really looking for in terms of to suggest that where we are, unlike this, where we spent a large amount of time, 6 months within the range, well, we've spent August, July, August, September, 3 months within the range here. The problem that I have here is that if we start trading below the 21 weekly moving average, we've got problems, okay? Problems down to 97, 98. And even to the point where you don't have to use a moving average. You can use a Bollinger Band system. Look at where the wick traded into the Bollinger Band low, into these lows here. So if we are going to break down over the coming weeks, if we fail to hold this level here, this key level of 108s, 109s, that opens a possibility and the probability that it's quite likely that we're going to see that 98 to 102 level. So that's just something that you honestly, objectively, okay, have to think about. One, it's opportunity to consider longs or potentially buying into Bitcoin if the level holds. Two, you've got downside risk to contend with. Three, I've already covered what the long scenario might be if it sets up. Now, in terms of the short scenario, again, I'm not sure what that quite looks like yet. But for me, again, I vaguely touched upon it, whereby if you look at the market profile chart, that we've got a bunch of single prints here under the value area, composite value area low. Here we are. Okay, let me just clear the chart. Here's the current profile. So in terms of profile, you've got 1 day, 2 day. This is your 2 day composite. You can merge these 2 days together. And you've also got a composite here forming. So really, when I'm looking at this, I'm thinking, all right, 113 is going to be a key level now. And then we've got this value area low. So if you look at how price is trading, look at where the value is. The value area high, the value area low. It's within this 2 day composite. So what's key for me is that if we push up into 114s, 115s, pull back into this 113 level and it holds, well, what do you have? You have a shift in structure. You've got a higher low, a higher high, another higher low, local structure for a trade back up into 116, 117s, okay? Taking out these poor highs, and then you got this single print to contend with, which is back inside value, that 5-week composite value, and that 5-week composite value area low is here. Let me just do that again. That if we push up into 117s and pull back into 116s, and that holds, we're back into value. You can look for 120. So trade location, another trade location. Caveat is if we reject off 114, 115, and guess what? If we then come back inside what I believe is going to be another composite, we get back inside here, we're probably going to go to the other side of the range. All right. So that's going to be the short scenario, or the rejection point, or the point of weakness. The point of strength is that if we can hold this high, then that opens the possibility of trading up into 117s. That's all I can do as a trader. My job is not to predict. My job is to identify good trading opportunities in the market that make contextually sense to me according to my system, according to the way that I trade and the strategies that I trade. And then that's all I can do is journal those, okay? Journal the pre-trade, the post-trade, what was the results, what did I learn, what can I do better? And the only way you're going to get good at this game, it truly is a form of pattern recognition. If you see the same patterns playing out over and over and over again, how many of you, right, can honestly say that you know what you can name one of your trading strategies and you can write it on a piece of paper or on a Word document and give it to your friend and say, here, trade this strategy. This is what I trade in detail. How many of you can do that? And that includes everything from trade location, trade context, position sizing. Is it an A setup, B setup, C setup? Then you've got to grade how much how much size you're going to risk on that trade. What percentage of your portfolio are you going to risk? Is it 0.2%, 0.5%, 1%? Have you even graded that into your strategy? Okay, and then your pre-trade write-up. These are the levels that I'm looking at. This is what I want to see. Here's a reaction, if else. You've taken the trade. Now, whilst you're in the trade, what did you observe with your emotions? Were you scared to pull the trigger? Were you scared because you think you're oversizing? Did you hesitate? Or did you fail to take the trade because you were distracted? And then what happened after that? What did the trade do? What did you do well in the trade? Yep, I executed really well, but I fluffed it because I cut my position because I was up 1K, but I never let it go to target. I shit my pants. Why did you do that? Well, that was because it's a fear of losing, isn't it? So you've got to really have a level of self-awareness. But even before all of that, do you know what you're trading? Or are you just trading levels on the chart for the sake of, I think this is resistance, I think this is support, and that's it? Whereas something that I've done is, why do I nail my trades more often than ever before? Because I've put in the hard work of, I know on order flow, on the DOM, on the ladder, on the footprint, what absorption looks like, okay? I identify that. I've seen that play out over 50 times. I've put it in my Evernote, okay? I've got a 50 samples of this example playing out over and over and over again. I've replayed the charts in Excel charts to look at what happens in this instance. What does the open interest do? What does the CVD do? What does the footprint show me? What's the positioning like? Only then do I build up that confidence. Do you know what? I've seen this play out 30, 40 times. I know what I'm looking for. Therefore, I know what and how I'm going to structure this trade. I don't know exactly where I'm wrong if conditions change in the market. And if you don't put that level of work in, then what are you doing different to what the majority are doing? There's a 90% failure rate when it comes to futures trading. Why is that? What are you doing to get into that 10% of traders who can actually do this for a living and have put in the hard work, who have put in time and effort and have a process, have a system? You have to go into a level of detail to understand your game. This is Excel charts. This is the order flow platform that I use. If I just load this up on a 30-day look back. That's the DOM and the ladder. You can see how thin the books are right now. Okay, there's not really much in the books there, both on the ask and the on the bid side. But putting that aside, if you look at this very, very carefully here, just give me a second. Let me just reload this. So far, is everything making sense? Relatively sense. I mean, it is what it is, isn't it? It's not so much. Yes, you've got to have a level of verification about the data, but it's more about the signs that I'm looking for. You know, it's obviously difficult to prove that is the data accurate. I don't have that ability to tell you the answer. Okay, I'm not going to dig deep into that. But again, when you look at the delta, okay, delta candles are my favorite. And when you look at the delta here up at the highs, two things that I talked about on the timeline, that there's a tweet that I shared about volume tapering off. What do you see here? You see volume tapering off. Look at this trade. Okay, look at this daily candle. Price trades up, wicks into that level, rejects. Look at the thinness of how much volume traded. Very little volume. But what did you observe? Look at all that aggressive buying up at the highs, okay? Look at that 85 million, 31, 37, 29, 25, 36, 15, 25. Large buying at the highs, okay? Not necessarily longs opening. It could be a combination of these shorts with their stop over here, puking their position. And then what does price do? Comes all the way back down. Look at all this aggressive buying, lifting, lifting, lifting. Probably somebody puking because no more buying was sustained. And look at how volume tapers off at the end. Really nice selling tail there. Price trades back inside, okay? Rejection wick, swing fill. Look at the next day. Aggressive selling at these lows, price pushing up. But again, what do you see? Volume tapering off. Aggressive buying, 25 million up top. 7, 19, 18, 41, 34, 22, 7.3. All this aggressive buying. Why wasn't price significantly higher? Because it's been met with a level of asks in the book, soaking all this aggressive buying, possibly as a result of positions puking, Okay, early shorts being shaken out of their position. Late longs piling in. What does price do? Look at where it closes. Okay. Look at where it closes. Right back inside, okay? Then the rest, this is what was key for me here. The key for me here in this instance was the fact that when you look at price, let me just get rid of all this. What's key here is if I go to, let's just say 400 ticks. What's interesting here is that look at this aggressive high volume area of price, okay? Sellers are stepping into the market very aggressively here. They're in control at this point. Why? Because these sellers have managed to push price lower down. Look at where it closes. That's where price closes. Well, guess what's capping price now to the upside? Sellers, once again, passively absorbing any aggressive buying, pushing the market lower down the next day. Okay, look at that. And then what you find is that all these late buyers up top, well, what are they doing? They become forced sellers. And you get that aggressive unwind all the way down into 120s. Okay, this is what the delta candles show you that you will not see on a standard candlestick chart. It really gives you an insight as to where volume is trading and what the delta is at each price point in the chart. And that's how you can observe that, hang on a minute, all this aggressive buying, if there's no more buying to continue this is fucked. It could roll over. Well, that's exactly what happens, okay? And then the next day, again, aggressive buying. Look at the delta. Pretty heavy on the positive side, okay? Price pushes up into this thin, low volume node, rejects. Next day, selling comes in. Then you get the big unwind, okay? Deleveraging, positions puking, all the way down. What do you find? Look at that thin tapering of volume. Can you see how thin the volume is? Very good point or candidate for a reversal in the market back to the mean, okay? And that's essentially what happened. Now we're in a bracketed environment, and even just by eyeballing the delta, you can see that sellers are pretty much in control in this market. Look at the red delta here. Now this is interesting, by the way, because I'll tell you what's interesting about this candle here. What do you understand? What can you see? All this aggressive selling, 15, 74, 47, 64, 24, 3.7, 22, 39, 13, right? For all this aggressive selling, why is it that when you zoom out, all price could do was trade this zone from 113 to 118s and yet close bullish on the day? What have you understood by this concept? That all this aggressive selling was what? It was being absorbed. Whoever was trying to smash the market lower down was met with a level of demand, okay? Positions being filled. Why did we close higher on a very negative selling day, okay? On a red delta day, heavily red delta. Why is price not significantly lower down? Well, you've got a level of demand soaking up any aggressive selling. Somebody's probably filling their positions. And the next day the market tries to sell again. Well, guess what? If you've been a passive buyer in all of this, where do you think you're invalidated? You're invalidated below this low. Look at where the volume comes in, right there. Okay? So if you can understand, you don't have to understand this, but it certainly helps to understand actually what is price actually doing at this level. Who's in control here? And so it's no coincidence that if this was the low where there's been a level of absorption, well look at exactly where we're pretty much puking, rolling over from. Aggressive selling volume kicks in again. That's what this is. Now, in an uptrend, right, this is the beauty of the market. You know that in an uptrend, that when you see aggressive selling like this, okay, and price can't push lower down, it's making higher highs. These guys, if price pushes up and trades above there, well, guess what's going to happen? They've got all their stops resting here, okay? That just imagine the next day, they're selling aggressively, and price can only come this low. All this effort, and this is all they can push price. Well, guess what? The minute it gets back above there, that's where you get the big candle up, because all these positions are going to get taken out. They now become forced buyers because they're having to buy back into their position to close out their shorts, okay? That's what causes those aggressive moves up. In this instance, all this aggressive selling was being absorbed, but there was nobody thereafter to take price higher, and that such that once these were offside, that's where you get the thin move down again, okay? Very thin books, like I said on Sunday or whenever it was yesterday, that the books are actually very thin. You can expect price to zip around 5K rotations. That's essentially what we've had since Sunday. 109s to 116s, 116s back to 109s, 109s to 113s, 113s back to 109. Really good rotational ranges, okay, where you want to manage your risk according to volatility. So using something as simple as an ATR, understand what the volatility is in the market and how you're looking to play that. All right. So I think that's it for today's stream. I hope you found that educational. I've pretty much shared my views, and I think really everything hinges upon TradFi markets, what equities does, what NASDAQ does, what Bitcoin does. There's no point in looking at a shitcoin thinking that you can go long on a shitcoin when Bitcoin is likely to break down. It's not going to work out for you. So understand what Bitcoin is doing first. And by doing so, you'll have a better understanding that where risk is skewed to. Is risk skewed to the downside, short term, or is risk skewed to the upside now? And even looking at this, looking at the book, I've got the tick size to 1,000. You know, there's bids resting at this 111, but look at this, the sell side, the slightly more stacked asks. Now, all of this is irrelevant. What really matters is the nearest bid to ask, okay? Because these are buyers and sellers with intents, okay? Anybody who's got their asks stacked up here, that could get pulled away, okay? Anybody who's got a large bid down here like this 46 mil, he can pull that away at any time. Not a problem, okay? It could also be somebody's take profit. Somebody looking to close out a short into 107s. So don't get too caught up on heat maps and price being, you know, 10% away from a level and there's a big level of demand here. Well, you should have learned, if anything, from Friday that all those heat maps that everybody was posting earlier in the day, well, they went to shit once liquidity got pulled. So what really matters is not what the heat map is doing or what the heat map is telling you. What actually matters is when price hits the heat map, what activity of buying and selling are you seeing, or are those bids and offers being pulled? That's what matters, okay? The actual transactional volume at a level, not the fact that you've got some fancy heat map with some lines here and you think it's going to hold, but you can't tell if it's actually being traded into and holding, whereas the DOM and the ladder and footprint will actually tell you the transactional activity at each price level depending upon your tick size. Okay, so that's the level of granularity that you can see with the footprint that the heat map won't necessarily give you. You don't have to use this, but for me, I prefer to use the DOM and the ladder. If there's one tool that I could trade with, it would be this, because one, it gives me the volume profile, it gives me the delta profile, okay, and I can also see the running delta as to who's in control. Okay, bids versus asks, and then the delta of this. There's my volume profile, okay? So you can see it's a fairly conventional day. We've got tails at either side. So if we trade, you know, earlier on, trade the tail low, probably get a mean reversion back up, vice versa, okay? It's a fairly balanced day today to some extent in terms of this range. So when you look at the range here, you can see from the last 2-3 days that we are in a bracketed environment, a range band environment, okay? That's what you can ascertain by looking at the chart, the candles, the profiles. That what really matters now going forward is this here. This is the zone that really matters, okay? Do we get acceptance below it and trade lower down? Can we get back above 116s and trade into 120s, okay? Right now, we're in no man's land. There's nothing for me to action here. All right, I think that's it, folks. I would have covered Ethereum, but I think for me the scenario is very simple on Ethereum. Below 39, not good. It doesn't get any simpler than that. Below 39 for me is very key. Why? Because, like I said, high time frame, one single level, Where did the market sell off each and every time? Well, it's fairly evident to see, look, price, wicks the highs, where does it sell off from? Here. Wicks the high, well, not wicks the high, trades into this level, sells off to 26s. From 39 into 26s. What does price do? Tries to hold the level. Underside retest, sell off, where? 23s, okay? And again, price trades 39s, sell off to 28s. Trades 39s, sell off to 21. Price, again, trades where? 39s, sell off to where? 15s, okay? Price, trading below that level again. This whole area is massive as far as I'm concerned. That if we start getting acceptance below here, I think there's a very good case that we probably trade into this 3,000 level, okay? And if you really want to take this further, for me, it's as simple as, well, look, we clearly know where we've got a defined range high. We clearly know where we've got a defined level of a range low. We take the mid of this zone. Well, what is that going to look like? That is essentially where? Right there, okay? And what do we have here? We have a level of inefficiency right here, okay? So there will be a bunch of single prints on the market profile chart between 3350 to 3050. Somewhere in there, well, not somewhere in there, but I'd be looking for this level to get traded if we're going to roll over the coming days. Acceptance back above 4,500 is key for me. Look at the monthly chart. It's very, very simple. 4,500, you get above that level, and I'll tell you that we're probably going to go to new all-time highs. Until then, they're the two big levels that I'm looking at, okay? But until then, contextually, even using the moving averages, do I want to be on the wrong side of the market? No, I don't. Okay, if you just flip the chart, why would you short this down into support? Would you not be thinking, all right, look, we've had a low, lower low, lower high, higher low, higher high. Equal highs or higher low into a higher high. So now there's that shift in context. And so if we start pushing higher, then you know the next objective is what? 3,400. Right, fine. 3,400. Do we get an over, under, back inside, trade down? Fine, cool. That's going to be the bullish setup. Or is it going to push all the way back into that mid-level? Then I'll take the long, okay? Backside, long into the range quarter, take profit. Why is it any different, whichever way you look at the chart? You know, I don't want to fade against this momentum here. For the first time since May, we have started to establish what could be the beginning, okay? Keyword, we might establish what could be the beginning. I'm not saying it is, but what could be the turning point in the market for the next few weeks, okay? Where am I wrong? Well, if we, just like we did on Bitcoin in summer 2024, you come down and take out this low, give me that, I might even take a long there, okay? So it's just the inverse of what I've just showed you. And I can trade it back into the bands. Long from 32s, 31, straight into 4,000. I'll take that trade 9 times out of 10. It is a mean reversion trade because I'm looking to trade it back into the bands. Okay, if the bands are going to be here, we've taken out this low. I'm interested in doing business somewhere in here. We've got an area of single prints here as well. So again, that whole area that I keep talking about, this zone, when you look at the weekly, it's around here somewhere that I would love to do some business when it comes to the long side. But again, when you look at the weekly, breach this and we've got problems again, you know. So just something to really think about. It's a level of indecision this week for me, but I think over the next 2 weeks we're probably going to get a clear direction if it's not range bound. All right, so I'm going to leave it at that. I think that's it for today's stream. Hello, Doc. Hope you're well. And that's all there is to it. Okay, so wish you all the best for the week ahead, the month ahead. The next stream will be in November. But as always, I've tried to cater to those of you who wish to learn about profile, delta candles, you know, charts, levels, moving averages, filters, how you can apply this to your trading, to keep it very simple on staying on the right side of the trade, right side of the trend. You know, you don't want to be counter trading the trend. And right now, I don't really see a reason to be rushing into longs unless we can really get above that 45, 46K level. Then I think, yeah, there's a very good chance we can go to highs then. All right, God bless, take care, and I shall stay blessed, and I shall see you in November. Peace out.